Hey guys. Okay, so most of you by now have heard about the Department of Treasury's revenue plan, first proposed in 2021, May of 2021, to have banks start reporting your bank account transactions to the IRS. So it's been causing a bit of a commotion, and I just wanted to provide a little clarity around it. I have been keeping track of questions that people have been asking me and also comments under some of my posts, so that way I can give you some pretty reliable information regarding this and hopefully stop the spread of misinformation regarding this. So what I'm going to do is pull up my list on my computer, so I'll just be reading from here. So that way I don't forget any questions. I don't have an answer to all of them right now, but I have enough that I think it'll be beneficial for you to watch this. Just gonna go question by question and read from here, so that way I don't forget anything. I don't forget any details. So if you haven't heard already, what's in the proposal is that it would require banks, credit unions, and other financial institutions to monitor deposits and withdrawals in your bank accounts, and to also report those transactions when the account has $600 or more during the year. And it's an absolute minimum at this point. There's no minimum number of required transactions. It's just $600 flat. It doesn't matter how many transactions you've had in that bank account throughout the year. Okay, so someone asked me how much information is the bank going to actually report, and reports are showing that it would include numbers of cash transactions per account, any transactions involving a foreign account, and transactions between accounts held by the same owner. And that goes back to what I was saying a couple of weeks ago. The whole focus of this initiative is to catch people who have not been reporting their earned income, whether it be from, self-employment, a so-called side hustle, or, any type of income where they would normally receive maybe a 1099, but maybe the business owner did not file one, or any other way that people are evading paying their income taxes and self-employment taxes. That's what this is geared towards. So it's not a proposal to provide detailed transaction level data by the banks. That means that they're not going to get a statement from them. It's just kind of a compilation of transactions. They're not going to show where you shop, what you purchased. It's not going to be anything like that. Is there any chance that the $600 threshold could go up? And that answer is yes. Actually, House Speaker Nancy Pelosi said that they do recognize that in order to get this proposal actually passed, that minimum threshold is going to have to go up, because it's kind of low and pretty much includes, everybody in America, right? $600 is super low. Will there be any other exceptions to the reporting? I'm assuming this is what the person is asking. So yes, definitely. Common transactions like direct deposits will be exempt from the reporting requirements. I mean, if you're a W-2 worker, you're a wage earner, and you get a weekly or monthly or bi-weekly direct deposit, that doesn't count. Those transactions are not going to be reported. Again, what they're looking for are unusual transactions that are not consistent, which happens a lot when you have a small business owner, someone who's self-employed. The revenue fluctuates, so they're looking for that. They're looking for fluctuating patterns, not regular timed patterns and deposits like direct deposits from an employer. Will additional reporting really make a difference in the tax gap? Absolutely. The IRS, the Treasury actually estimates that over a decade, they're losing about $460 billion in revenue. And that is just from people not reporting the earned income that they should already be reporting and paying the tax liability on that income. So $460 billion that they're not getting, that they estimate that they should already be getting, is what they're actually trying to recoup.